E from marketwizards.com and eminywizard.com, and it is the 21st of June, 2019, just after IB, reminding traders to use risk capital you can afford to lose. Well, we've had a very, very quiet IB. We have suggested if you're going to play, probably the best odds would be to try to get to the half gap, 58.5. No real edge. If you're a conservative trader, you don't like what you see, then stay sidelines. We didn't like betting against the high odds trade. Again, probably not what it used to be, 82% close it, but certainly higher odds than just fading it and closing your eyes. And at the double top to 58.5, I'm suggesting make sure you are paid if you're playing the long side. Just such a tight range. It's hard to think about any one big bite right now. It's a 2-minute chart. Been looking at this, figuring would get some over and under, but we could at least see some rotations. Tough range. Very small overnight range, and obviously very small IB. And so when that's the case, you want to think about taking profits. If you get anywhere near where you'd like to go, you've got to cover and get something. Normally, we like to see the half gap close during IB. So it tells us the market, from what we're seeing with the disconnect between the NQ and RTY and the E-mini, not all in sync. We're thinking that the best posture is if you're playing risk 2, make 2. Try it a couple of times, get your vig, and then go play. Boys are probably already in the Hamptons drinking. AV team is on the field. Yeah, and the summer starts by noon today. And looking at the predictive chart we talked about earlier, quick review. We held at 88 area we talked about as support. There's a review, a weekly review kind of. We talked about the 88s being a support area that held. We talked about this area right here, this 9.25 being a support that held. We got the news. We talked about 15.5 being support that held. We got the ginormous bounce. We talked about this being a third time through trade. This was a dynamite triangle right there. We got the retest coming back. We talked about this being supportive. Make sure you're paid. Coming back into 37.5 to 35s. That held. And overnight, we suggested 48s probably be our support. That breaks, then we open the door to 45s to 42s. So if you're learning this business and you're trying to understand the way we look at it, we feel the market has been bouncing. We've been in an uptrend. We know we're going to miss the exact top because we're not trying to call the top. We just know that in an uptrend, we want to be buying support. So if you have done that this week, with the idea of not trying to call a top, but try to find support and buy it, then you've had a fairly good week, I would think. And remember, we just need small pieces of these moves. But a position or swing trader is going to be looking at these types of ideas that I'm referring to as buying support instead of trying to guess against the trend. Very important distinction. When we're in downtrend, it's just the opposite. Now, there will be days like this where we get all of a sudden a break of what we're thinking, like yesterday, coming down. Okay, fine. You want to find deeper support. We still know where that is. Anybody that was trying to buy in the 42 area, 43 area, you get beat. You take your stop, collect your wits, and say, okay, I'm going to try one more time, because the plan was to try to buy support. Said, let's buy the pullback after this great big run. Guess what? That worked. So we're trying to be consistent with what we're looking at. Thanks, Zeke. And Zeke is pointing out the need to be aware of any potential news events, especially by Donald Trump. I couldn't agree more. So I understand right now we're in some kind of a consolidation, and the same odds aren't here right now. Certainly for the longs after this type of a week, it's hard to imagine putting on longs and thinking of that as a big pounded table up. And that's why I say this is perhaps a squeeze type trade. Frog in boiling water and try to squeeze back up here to get that gap. This will be a third time through up here. But it's playing for the half gap. You're about 2 ticks away. Reminder, last year's high, 29.47. So this continuation, if we stay above it, and obviously eating back into last year's range if we're below it. I placed my bet on this side. I said, if we're going to play in a range-bound range, let's think about the half gap and the gap trade as better odds. Simply an odds call over time that's the better trade than trying to guess against it. Anybody that's got half gap, best in the highs, we've got about a point away from the gap. Froggy. Frog in boiling water trade plays out. Get paid. Don't squander it. Two-minute chart. Pretty helpful to see the rotations. 10-minute chart still supportive. Here's our 5-minute chart. The 10-minute chart, very helpful today to back up this chart. Gentlemen, if you got your VIG, guess what? You get to go play golf. Make believe you're a big boy and go back to the Hamptons. 1 tick missing. And this neckline was pretty helpful. This is the excite the shorts. And then we climb the ladder back up and take them out. 1 tick missing. Got about Not quite 10 points yet. Terrible range, but it is what it is. The good news, anybody that played for the high odds trade, you got your VIG. Your day is done. You don't have to do anything else today.